Hello and welcome back to another video. Today's video I'm going to be reviewing price action on GU and DXY as a result of market participants' actions taken. Now I managed to yield 1R, which yielded me 2% on one of my accounts. So overall it was actually a great trade, in line with what I was actually anticipating. And before I start the video, I'm just going to be actually highlighting why I anticipate price before it actually happens. So for me, a big part of my edge is anticipating price action before it happens to actually prepare me for what is most likely going to happen next. Now, I know that may sound a little bit confusing, but all it is, being able to cut my losses shorter and take profit accordingly to the actions market participants actually choose to take, in real time trading. Now, it's easy in hindsight, obviously, if you've collected some sort of data. When you're actually collecting your data, you can say, oh, it's going to make a large run for price. But when actually trading on live accounts, it comes a little bit different. So for me, anticipation is key, especially before looking to get into a trade on an intraday level and even on a swing trade level. But let's first hop on DXY and actually just review what I was anticipating price action, how I was anticipating price action to play out. So as mentioned on the Monday, I was expecting a run of previous weekly high just to, stop out some of our last sell orders in the previous week, which is exactly what happened today. Now, from this point onwards, I was expecting some short-term reversal profile, and the same thing goes with profile. It's just preparedness, being able to manage price accordingly in real time. That's a key part of my edge, as mentioned. But let's actually hop down to the more mechanical parameters to start off with, just to show which also added confluence to actually taking a trade today. So we obviously swept previous weekly high in Asia's trading session here. Now, because we swept previous weekly highs, such a significant level in Asia's trading session, I was actually expecting London to be some sort of range of consolidation, offering a less probable session to actually trade. Now, reason being is because historically we've seen that if Asia's expansion, then more likely than not, London's going to be a lot slower. Now, I'm just using probability in my favour. Some of you may have different things. You might be able to take advantage of some sort of continuation, etc. But it's just how I actually adapt my model, okay? From this point onwards, from London onwards, let's drop down the 5-minute time frame here. Just show you the opening of New York. So what can we actually see previous to this? We can see internal range liquidity actually being swept, leaving us with some sort of significant high to actually look at and actually, pick up upon. So from this point onwards, we actually saw, price action actually trading below, some of our internal lows here, adding to confirmation that participants were most likely going to push price lower. Now, as soon as this comes in line with time here, such as the New York opening, we pick up on, well, me personally pick up on things like fair value gaps and breaker blocks. And you can see this aligns perfectly here. And the reason being is down to probability. More likely than not, when aligning these parameters with time and price, market participants are most likely going to push price lower in this example. Now, when actually anticipating that price was going to get pushed lower from this fair value gap aligning with time, price, and my overall, bias, I'm looking for some signs and clear signs of predictability. So predictability comes into play for me when I see this bearish candle close here, below this fair value gap and breaker block. And this is when I actually look to get into a trade. Let's pick up on this on GU. So let's take, for example, here, we've got our sell side liquidity swept. We see a run up, just adding to the confluence that participants are most likely going to push price higher. That's exactly what we got here. left this fair value gap here aligned with time and price of what it's actually how participants have actually played it out. And we see the push up here from OTE, a place where participants are most likely going to react, historically, and adapting this thesis into the future, just using probability and predictability yet again, not focusing too much on the technical factors. So as soon as I'm not going to go on too much, but because it just sort of mirrors DXY, but as we see a push up here, this is exactly where I execute. Originally I was targeting this high here, but down to timing obviously being restricted by the clock, I actually look to get out earlier, protecting capital and protecting, the equity I'd actually gained up until this point. So what's this point here? 130. 130 is where there's most likely going to be a retracement in a fair value gap or a run for some sort of internal or external range liquidity. This case here shows a clear run at this 5-minute fair value gap, and from this point onwards, this is where I was anticipating a swift move to our internal range high here, which you can see price action is coming up to now. The reason why I didn't hold comes down to probability, but I'll get onto that a little bit later or in another video. But you can see I got out and decided to get out down to time here. As we can see, we're coming to up until 8 AM here. We've obviously got a nice open, low, high close at this point onwards, but I just chose to get out at my 1R and keep the equity that I'd actually gained, and I took profit with the technical help of the 618 extension. So that's today's trade. That's just a very quick rundown. There's more on it in the actual Telegram server, and actually I've added a little bit more just about what I'm actually anticipating going on into the week. But let's just quickly make a rundown of what I am now anticipating price action following from what Monday's participants have actually and how they've actually traded. Now from this point onwards, I'm actually looking for price to actually get traded lower. Yes, price might actually trade higher and actually trade above and then make a run for the lows, but overall target actually withstands here at the weekly fair value gap like mentioned in the previous video. But what I want to highlight is if price shows clear signs of continuation high and trades above this high here without quick liquidity sweep, then remaining in our anticipated reversal profile. This comes down to probability as well. If price action actually trades high and shows signs of continuation, more likely than not, it will be low probability price action, probably going to present itself with some sort of range of consolidation. And reason being is because we've actually swept our significant levels here. We're actually trading in, our weekly premium here while taking buy-side liquidity. And obviously we had a huge volatile week last week. So that's just adding to predictability that if price action does trade higher, that it will be a range of consolidation. And if so, I will not be taking any trades. I'll be happy with the trade that I've taken this week and the profit that I've actually yielded. However, getting on to what I actually anticipated now. If price action starts to make a run lower and we can actually see, signs of disrespecting our parameters such as fair value gaps, our breaker block here, our low here, then this is where I'd be, waiting to position myself in a predictable daily candle. And for me, I'm going to be looking for our predictable daily candle to most likely be post CPI on the Wednesday. Now, reason being, more times than not, we've seen historically that Wednesday is going to be some sort of reversal profile, aligning with our actual outlook. So that is why I'm waiting, and obviously there's other factors that I won't get into too much, but obviously the more daily candles that actually materialize in a given direction, targeting the core of liquidity, the more predictable the next one is going to actually be. So with saying this, and what I've actually just said, then I will be looking for to actually get into a swing trade. And the reason why I'm actually looking to get into a swing trade this week is purely to protect the capital that I've actually gained this week from a trade as shown before. But it's also just to, avoid intraday noise. So if we trade up here and show signs of lower, what's Wednesday most likely going to be? It's going to be our news driver towards our draw, which I'll be more than happy to get in a swing position in. Now, updates and clarity and actually going into this a little bit more is all posted in my Telegram. I'm getting a little bit more used to obviously speaking my thoughts and trying to get across what I'm actually thinking and some of the knowledge that I've actually gained while trading over the years. But I hope this video is somewhat informative, and if you want more clarity on anything, just feel free to give me a message. But yes, that's everything. Thank you.